the goal of business is to find your next business.
Yeah.
And I think we've all done that on some levels. It's like stairs, right? Like I did this and it got me here. Then I could get on the second step and then I get on the third step. And everybody's staircase is different, I guess, if you will.
Welcome back to Real Investing, where we talk about real investing for the everyday investor. And I'm actually kind of happy about this episode. I've got two of my longest term friends in the real estate industry. My co-host Ryan Harper and my good friend Mike Hambright. So I'm not sure there's another guest that we've had that I've actually been to their house and talked to regularly. So it's good to see you.
Good to see you, man. Always.
I'm going to dive right in. This episode's going to air right before you have Investor Fuel Live.
Oh, nice.
Which is your big event in Dallas coming up.
September 7th through 9th.
Not 7th through 9th. That was last week, Mike.
It is October 7th through 9th. You're right.
And then Investor Fuel, the quarterly mastermind, is in Fort Worth.
Fort Worth, right at the end of October.
At the end of October.
Yeah.
Great. So we're going to talk about that, but this isn't some sort of damn commercial.
Oh, yeah.
You recently bought a farm ranch.
We call it a ranch, but there's no animal other than wild animals. But I think it sounds cooler to say ranch than a farm.
I agree. And you built a house, and now the house is habitable.
Yeah.
We were talking a lot about it. I want to skip all the crap you've done in the last 20 years to get to that point and really talk about, as an entrepreneur, as an investor, why did you buy a ranch? Why did you build a house on it? How's that been? And that kind of stuff.
So I'm on my 10th midlife crisis. No,
10th?
I think, it started with during COVID, where like we've talked about buying some land or what are we going to do if the shit hits the fan type conversations, what you do when you start approaching 50, and it turned into like, well, we bought some land in East Texas, and then it was like, well, we could put a mobile home here, we could build a tiny house, or we kind of went through everything, and then we built something way fucking bigger than that. We just went way overboard. But we started kind of thinking of like legacy stuff, right? I mean, we talk about stuff like that sometimes, like what do you want your legacy to be? And for me, it was like, I love entertaining, I love hanging out with friends and family, and it just seemed like this amazing place to be not only a getaway for us whenever we want to go out there, because truthfully, it's in East Texas, we live in North Dallas, but it's 90 minutes away, so it's like, it's not that bad. I mean, when you're a real estate investor in Dallas, you might spend 90 minutes going from one appointment to the next, right? So it's not really that big of a deal. And it's just taken on kind of a life of its own. It's on some levels a big distraction, on some levels a really cool thing that I'm probably more excited about than almost anything else I do right now,
I've had a lot of fun in the last 2.5 years of being involved in Investor Fuel Live, and the different people I've met and the things we've done. We've already had a couple of your members on, John Nolan, Ben Algeier, and obviously I've got so many friends there. There'll be more of them on.
More, yeah.
But so Fawad Bazi was on, and he talked about family, fitness, faith, and finance. And one of your taglines is fuel your business, fuel your life. And I've always liked that you tie it together about, well, on my personal website, there's a tagline at the top that says, remember, the business is the vehicle, not the dream. Because so many times in my 20-something year career, I get way over my skis into focusing on the business, the business goals, the business requirements, the business needs.
Yeah.
And you start to forget
why you're doing it all.
Yeah, so maybe talk, again, I don't want you, we're not here to promote Investor Fuel.
Yeah.
But talk about what you've learned in your entrepreneurial journey that made you feel passionate about not only focusing on that, but also sharing it with the community.
Yeah, I think for me, like I'll kind of, if I go back to, I'll tell you a story. I don't know if I've told you this story before. When I was, God, I hope my son doesn't watch this because my son is 17. So when I was 16 or 17, I got a fake ID, and then I started back then. This is going to date me a little bit, but you'd go into a liquor store a couple times, and then they never ID you again because, well, we know who that guy is, you know. And so I was literally buying like several kegs a week. I was like the guy throwing parties and everything. And my reason for telling you that is I've always been the guy to pull people together. I've always been, you guys do the same thing, right? Is pull community together. We're always about pulling people together.
I love buying kegs. I mean, I don't know about you.
I mean, I haven't bought a keg in a long time.
I got kegs right over there.
But my point is like, I've always been that connector. I've always been somebody pulling people together. As long as you've known me, I've done stuff like that, right? As long as I've known you guys, you do stuff like that too. So that's why we're all friends, because we kind of have the same, cut from the same cloth in some ways, right? But I think, there's my buddy Matt Andrews, also in Investor Fuel, good friend of mine, said this one time in a presentation at Investor Fuel. And right when I saw it, I was like, that totally explains like how I feel and everything. He said, real estate isn't the thing, it's the thing that gets you the thing, right? And back to what your comment was just a minute ago, is like, I think as an entrepreneur, like sometimes you get in the weeds so far in your business and you kind of forget why you're doing it all, but you did it all to build a better life. Like probably started with financial freedom, and once you do well there, you're like, really what I want is time freedom. I want to do whatever I want, whenever I want, and I want to hang out with whoever I want to, right? And so you got to have money generally to do those things. I mean, you could be a homeless guy under a bridge and hang out with some people and have all this freedom, but that's not the freedom that I want, you know? So I think everything I do now is just about, like, it wasn't always that way, but it gets to a point where you're like, what is this for? Why am I doing this? You go through stuff like COVID or a parent dying, or like things just happen in your life, and that's what wisdom, I guess, is all about. You get older and you're like, I don't have to do this. Why am I doing this? And what do I really want to do? And you start to hone in on doing what you want, when you want, with who you want, you know?
I think something you just said, it's, you know, it resonates with me, because it's like, you can't be so myopic. You do have to be myopic to like singularly focus to make a business successful.
Yeah.
But you still also have to keep a wide enough lens of like, hey, why are you doing all this?
Why are you doing this?
You know, and it's funny what you're talking about, the real estate being the thing to get to the thing, because it's kind of on point, but not on point. When I worked in Dubai, everybody used to say your first job in Dubai is so you know how to negotiate for your second job in Dubai.
Yeah.
You know, so I don't know if that, it's just funny, but
I heard a quote not that long ago. It was like, the goal of business is to find your next business.
yeah.
And I think we've all done that on some levels. It's like stairs, right? Like I did this and it got me here. Then I could get on the second step, and then I get on the third step. And everybody's staircase is different, I guess, if you will. But I look back at all the things that sometimes people look at us and they say, like, it seems like you planned all this out, but I didn't. I just got to that step and I said, well, I'm going to go this way now or that way, or bolt something on that just made sense at the time, or certainly bolted on a bunch of stuff that made no sense, and that stuff's not around anymore in many instances, you know.
I'll share this. I mean, and this is not going to become a real investing therapy session. But, you know, last week, several people from my company and I needed to get to Phoenix really quick to have a very important strategic meeting where Ternus Lending became the exclusive financing provider for Investor Lift.
Yep.
And Investor Lift, in case you're not out there, number one, a great place to find discounted houses, great place to sell discounted houses. But they also have tens of thousands of users that are actively transacting real estate. So obviously or investment real estate, obviously as an investor lender, to be on that platform as the exclusive finance provider is huge. Well, this is not a flex, but a colleague of mine owns a Cessna Citation. It's a jet. And so we decided to take the plane because we needed to go on Thursday morning, but I had to be back for my son's football game. He plays freshman football, and I'm just committed as a dad to not miss these things.
Yeah.
We fly out, and some people there, and they want to take pictures in front of the plane and all that. And my partner's like, please don't. And anyway, we did. But we wanted to record the announcement of the partnership, and why not do it on the tarmac in front of a private plane? But the point of this story is, on the way back, I was talking to the people on the plane, and I said, look, I've never worked this hard in my life. The last 8 months has been the most difficult thing I've ever done. In my 23-year career, I've never been at my intellectual capacity before this year. And there have been multiple times this year where like it hit, like to where it's just like, oh my gosh, I can't do any more. And I was sharing that story on the way back, but the point is, it was all intentional this time. In past Tim, it would have happened on accident, and I would have probably had to like shut down a company or something. You know, it's a bit like, oh, not going to do that. But then just yesterday, my first controller started working for us. Up until now, it's been like me and another partner like doing the books and like sometimes doing them, sometimes not doing them, or doing them a month later when there were a bunch of questions. And I called Jennifer on the way home, and I said, oh my gosh. She goes, what? I said, for the first time, I can see a world where I actually have my P&L and balance sheet updated in real time, and I'm able to report to the board every Wednesday on the budget versus actual P&L. And I've got this VP of Ops in Charlotte that she is just amazing. And I've got this VP of Sales, and he's amazing. And my EVP that's joining the company very soon, and by the time this airs, Robert, I mean, he's the only executive I know that's been constant in this industry 10 years straight. Mm-hmm. And like now I see a world that all the hard work that was intentional, we've closed $12 million to date, and we'll close another $10 million in the next 30 days. Mm. Like the ramp is hitting, the hard work is hitting. And I told Jennifer, I said, the plan's always been to fire myself within the first 2 years and hire a CEO to come run the company. And it may happen quicker than that.
Yeah, you're an overnight success.
Yeah, well, right, but I guess that grind is necessary. Ryan, you kind of touched on it, but you have to have an exit from it, or it will kill you.
Oh
like,
yeah.
I mean, I hate to say it like that.
There's no doubt. I mean, I have a lot of things going on. You've got a lot of things going on, and there's stuff that I'm still like chief bottle washer. Like I'm involved, right? And I don't, it gets to a point where you don't need to do those things, but I like the challenge. I want to, this is going to sound cheesy, leave a legacy. Like, there's just things that I have that are like, I need to check those boxes. And there's things that I still do that I don't really want to do them. And I don't necessarily have to do them, but I have to do them if I want to do the thing,
Right.
So,
the thing that gets to the thing.
That's right.
Not this thing, the next thing.
That's right.
I told Jennifer, we've got to sell all of our rent houses. It's just one of those things. Like, when there is a certain type of problem, it feels like and seems like I am the only human being on the face of this earth that knows how to solve that problem.
Yeah.
And I think you guys both saw my Instagram post where like the ceiling was caving in, but the paint was holding like 20 gallons of water. It's an amazing post. Go look at it. Like, whatever paint we used during COVID, I don't think they sell it anymore. It had to be from China. Well, but no, the whole point is that came in at Saturday morning at 10 o'clock.
Yeah.
I had to tell the tenant to move out. I had to call around to mastermind friends of mine, but I still had to get in the truck and drive to San Antonio. So that thing is going to keep me from ever getting to that thing, so I got to get rid of that thing.
Yeah. A lot of what we talk about here, or even in this conversation, when it talks about leadership, I think this whole podcast should be about leadership, frankly, because it seems like we always go there with it. But when it comes to this business, a lot of that is. But the power of actually making a decision. Because I think when you're in charge or when it's all on you, you have to make a decision. And I think, middle management, and I don't want to say underlings, but the employee tree, whatever you want to call it.
Sounds good.
What separates is people that can actually make a decision versus just waiting for a decision to be made. And I know even in my business, it's just like, for God, somebody make a fucking decision.
Yeah.
Like, because that's the most exhausting thing to me is just always you have to be the guy to say left or right.
Yeah.
And there's a great scene in that movie, Battle for Los Angeles. It's an alien movie, whatever. But
that's the greatest movie you can name right now.
I've never seen it, but I want to watch it.
For this point, because there's a scene where there's this old grizzly staff sergeant talking to a young lieutenant, and he's like, sir, say left, go right. I don't care. Just make a decision, and I'll follow you wherever you want to go. And I know you're right. It's an alien movie. It's kind of stupid, but it's so relevant because as a leader, as a business owner, it's like standing still, you're going to die. Left, right, it doesn't matter. Just go pick a lane. So.
Yeah, I think that's probably one of the skills that I've learned along the way is like you just have to make decisions. Like sometimes, like people assume your decisions are always right as an entrepreneur. Somebody's been around for a long time. It's like, I don't know if it's right or wrong, but I'm going to make a decision. Or people would say, well, what did you do when this happened to you? It's like, that's never happened to me, but here's what I would do. Just because it might not be the right answer, but you have to make a decision, right? You just have to move forward. So
Blackstone, I'll never forget. I'll probably tell the story way too much, but I'm going to tell it again. When my first time meeting the guy that was he had $1 billion authority, check signing authority at Blackstone. And we went and had drinks, and I was on my way to the hockey game, the New York Rangers game with our law firm. And we're standing on the curb, and I'm about to try to hail a cab, which I really screwed up, and he had to do it for me. And he goes, Tim, listen, the bottom line is at Blackstone, we hire the smartest people in the world, and we expect them to be wrong at least 30% of the time. He goes, the key is you must be confident enough to acknowledge your mistakes and stop it. And that's where entrepreneurs go wrong. Something's not working. They think they're going to be perfect, right? A Hall of Fame baseball player, best case, 30% of the time is successful at the plate. Best case. Some of them, like 26% of the time, 265 batting averages, right? But entrepreneurs, for some reason, every business decision is like stepping to the plate.
Yeah.
And they think that they're going to be 1,000%.
Right.
And you just can't. And you have to just own that, accept that. But like you guys are saying, be okay with being wrong. But if you decide to go left and you start getting shot at, don't keep going left. Stop, go back, and go right.
Yeah.
So you deal with a lot of, with InvestorFuel, you have a ton of people. As a lender, you talk to a ton of people in that lens. But I would assume you talk to people on a much bigger lens just because you're dealing with all the problems, whereas Tim may be dealing with financial problems. What is the common issue most people are struggling with, either now or just in general?
Let's talk about now first, because I think that's very relevant.
Yeah, I think, I don't know if there's one common issue, but some of the most common ones are can't get out of their own way as an entrepreneur, and it's hard.
What does that mean?
Well, just, like seemingly knowing what they need to do, but just can't like get the decision. The decision might be made, but they hire somebody and the problem's solved. Like it's easy for us sometimes to throw money at problems. So we throw money at it. I hired somebody and it wasn't the right person, and then it just boomerangs back to you. So that's a pretty common thing as a real estate investor, especially the acquisitions people, kind of key people in your business, salespeople, is that if you don't have multiple people, like as a small business, you often can't have you can't afford redundancy in your business. So you make a bad hire and you do one of two things. Either it seems like the lesser of the evils to just keep that person there because I don't want to do that. I'll just let them keep running with it even though they're not good. Or they leave and it comes back to you. And so you get stuck in this situation where you very much have a job and not a business. Like you're still doing a lot of stuff. And so there's, I think you know who Trey Taylor is. Trey Taylor spoke recently at InvestorFuel, and he said, a lot of CEOs operate where their job is to do all the stuff that nobody else on their team could do. And that's a problem, right? You end up doing all the shit, all the crap, all the stuff you didn't trust somebody to do or you didn't hire the right person for, instead of making sure you hire the right people so that your job can focus on, as he says, 3 things, but strategy and having the right people in place and casting the right vision and all those things, right?
Yeah. You mentioned on one of our recent episodes talking about single point of failure, right? And so at Ternus, now that we're past like the 20 full-time employee number, as the president and a partner, one of my biggest concerns is what if something happens to one of the key people? Like what if, I'm 46, I'm high strung, I drink too much and all kinds of things. What if something happens to me? What if I stroke out, have a heart attack, or just
I didn't mean to laugh at you stroking out. The term stroke out.
I
is
mean,
funny to
I
me.
have a Mike Hambright midlife crisis and moved to the ranch, right? The whole point is, who's number two, right? And so you guys have met Robert. Robert's going to be number two because I believe he can carry out my vision.
That guy? I'm just kidding.
Yeah.
He did just tell me, I was like, what's your main role? And he's like, mainly cleaning up Tim's messes.
Right. Well, but then also I've taken it a step farther and I've told Brian, the VP of sales, that he's going to have to designate a number two. I've told Lacey, the VP of ops, she has to designate a number two. And the controller, the big problem there is that will become a single point of failure. She just left her last company. They had to hire 2 people to replace the job she was doing.
Yeah.
So I'm already now looking 3 to 6 months down the road that we have to get a staff accountant under the controller. Like as soon as she learns the job and I give her a chance to put her fingerprints on it, I've got to bring in a number two because this month we'll do 70 something loans. This time next year we'll be doing 300 or 400 loans a month. And if you're doing 300 or 400 a month and one person goes down that, like Mike said, is the only person that can do it,
Right.
you have a single point of failure.
So when you're doing that, like, hey, I have $100 to pay out my entire staff, and I've already maxed that out, and then I grew the company to 120. Now are you going, oh shit, now I can hire $20 worth of more staff? Or because like if it takes like, so how are you stair stepping that? Or is it like, hey, we're just taking on debt and we're building out a big ass company and we're not worried about being profitable right now. We're worried about having a sustainable big ass company
This
that
is the
we can
case
exit.
for growth, right? Like, I think when we were coming up, the growth was, I can buy toys, I can just do whatever the hell I want. And so now, I think the way that I look at it now, with some years and some wisdom and some experiences and some mistakes, is like, the case for growing your business is not to get a Lambo or whatever. You can get all the toys you want, I don't care. But it's really to be able to buy back your time and invest more in your business. Because if you don't have a couple, and by the way, my businesses are not all like this for sure, but if you don't have a couple people that are there in case something happens to one of them, you do have a single point of failure. So this is back to your question a minute ago. There's a lot of real estate investors and a lot of entrepreneurs that have a single person, a single point of failure, and they keep getting pulled back in. The sales guy just quit. I got to be the sales guy now. This person is sick. I got to step in and do that, right? And as an entrepreneur, that's a job, right? And so you have to grow your business, and you just have to keep plowing your profit back into the business to grow it to a point to where it's just more stable and it doesn't require you anymore.
This is why I'm such a huge fan of outsourcing for real estate investors. So I think if you don't have the budget, maybe instead of hiring a bookkeeper, you should hire an accounting company, right? Because then Mike's accounting, you don't know you have that business, but you do now, may cost an extra $500 or $1,000 a month, but I've hired Mike's company, not Mike.
Right.
So if Susie, who works for Mike, goes down, it's Mike's problem to do my books, not mine, right? I think a lot of more investors should hire virtual assistant companies versus trying to go cheap and save $1 or $2 an hour and recruit some VA in the Philippines that they have to manage
Directly, yeah.
and there's no redundancy where if
Right.
that person gets COVID, all of a sudden.
You got to go find somebody else and train them yourself.
Yeah. So I think, and I also have to make this point because this is not some sort of like I was born with divine wisdom. This is the mistake I've made at so many companies.
Yeah.
At this company, Ternus, I spent a year planning it. And I've had the dates that people would be hired on a chart. And that's a variable chart. And so now the hiring plan was get to 5 loans per month, where I was the loan officer, the processor, the underwriter, the closer, the accountant. I did it all. And once I got to 5 loans, we started hiring. And once I got to 10 loans a month, 2 months in a row, the next leg of hiring began. Once I got to 20 loans a month, 2 months in a row, the next leg of hiring began. The next stage is 50 a month, 2 months in a row, which should happen this month. And then we have to immediately staff for 100 loans a month. And here's why. It takes 30 to 90 days. It takes 30 days for someone to be at 33% efficiency. It takes them 90 days to be fully trained to handle the pipeline you expect them to be able to handle. 90 days from now, I'll be at 100 loans a month. Like if I hit my 50, and if I don't hire them now, I will be understaffed when I achieve it. And now I'm in my own way because I can't continue growing. Now we have to pull all the way back so that we can keep up.
It's interesting that you brought up about how you spent a full year planning. Because I think as entrepreneurs, at least I won't speak for all entrepreneurs, but I think for me specifically, it's always been kind of a badge of honor that like, I'm gonna leap first, jump off the cliff, figure it out on the way down.
My first 16 companies were that way.
Right, and then it's just like, no parachute, no wings, but I'll build it. And it's funny you say that because I literally was just in this thing last week, and one of the things that we went through was it was a 3-hour lecture on the importance of pausing and planning. And it was done through like this childish game, which we all felt stupid doing it, but then it was like, aha, if we would just waited 4 turns before doing the thing, you would have won the game.
Well, check this out.
But let me just bookend it. The whole thing was pause, take mentorship, have somebody coach you, to have a plan in action, and then you can succeed. So that's really cool that you took a year to plan.
You would be amazed. I'm going to toss this is actually a question for Mike. How many of your members, when the wholesale market kind of got cut off in late 21, early 22, all of a sudden decided, well, I'll just start flipping?
Yeah, a bunch.
And then how many of them ran out of money within 4 months?
Probably a bunch.
Because they didn't know how to plan their cash conversion cycle. They didn't know how to look at a cash flow calendar. They just thought, I still need to make 20 grand per deal. I'll just flip. They don't understand. I talked to a friend of ours, Phil, in Buffalo. They don't understand the duration effect of taking on inventory. Because when you're wholesaling, it's unit in, unit out, unit in, unit out, unit in, unit out. When you're flipping, it's unit in, 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 unit out. It's 9 to 12 weeks, best case. Yeah. And if you're still buying at that same clip, you've actually taken a machine that maybe used to be able to do 2 a month, and you've gone from most likely 8 or 9 in inventory to 30. And the debt service and the carry cost and the overages crushed a lot of amazing operators in 22 and 23.
Yeah, and the risk. You own the inventory now, right? Versus assigning it. So yeah. Back to your comment a minute ago. I think in our industry is notorious for having this badge of honor for being in the hustle. And I've talked about this many times in the past. Like, there's no honor in the hustle. Hustle needs to be a season, not like your strategy, right? Because you clearly have a job if all you do is hustle, and if you can't figure out how to get beyond that, all you're ever going to have is a job.
I like that. That needs to be a quote. Hustle. I'm going to quote it in LinkedIn later when we're done.
Yeah, I've got a trademark. I've got a trademark already. I'm willing
I'm going to quote
license
you.
it.
I'm going to put Mike Hambright, but hustle is a season, not a. It should. What did you say? Hustle is a season, not a strategy.
Which is like hope is not a strategy, right? Like I don't remember who said that recently on the Instaface, but
I'm going to post it right now before I forget.
Kamala thinks that you hope.
You brought it up. Debate was last night as we sit here and record this. This will air in a month or so.
Yeah.
Do you think the election will have any impact whatsoever on the real estate market?
I think it definitely will. But I think, that's another thing. A lot of people, certainly a lot of entrepreneurs, are worried about who's in office or what interest rates are. I mean, you have to build a business that operates irregardless of that, right? So I was just talking to our buddy John on the way here and saying, because we were talking about it a little bit, and said, we could probably talk for an entire day on the politics of this stuff, right? It's like, well, the Democrats say they want to bring housing, make affordable housing, and we're also going to give you $25,000 to buy a house. It's like, that causes inflation. Like, that's why we're in this situation. We keep printing money, and the inflation will never end, right? And so it sounds good. It's a soundbite to somebody that's broke and wants to buy a house. But the reality is housing prices are never coming down substantially.
Kevin
They're only
O'Leary
going-
did a cool post about that. He goes, that just helps the sellers. It doesn't help the buyers because
Yeah.
immediately prices will go up by $25,000.
It's the reason to just keep rentals. It's one of the reasons why I've kept all my rentals, even though they're a pain in the ass. It's like they're the best hedge that you could possibly have against inflation, you know. And inflation is not going away. I don't care what anybody says or anybody thinks or what the media says. It ain't going anywhere.
And here, I'm going to be a nerd, but I'll try to use Tim Herridge marine language. So, rates go down, and all the Insta gurus say that's going to make values skyrocket. Values skyrocket. One of the largest influencers of the CPI, the core inflation that the Fed decides on what they're going to do with rates, is housing. So if housing does go way up, inflation goes way up.
Right.
Which then means what else goes up? Rates. We're going to see, man, I just guarantee you, rates, well, I'll just say this, the 30-year fixed on investment mortgages hit 5% again today. 5%. Now it's a hard loan to get. Most of the rates are going to be in the high fives or low sixes.
Right.
But it's a lot better than the 9 we saw a year ago.
Yeah.
It's dang near half or 30% reduction. But here's what's going to happen. Rates will go down, demand goes up, prices go up, inflation goes up. Federal Reserve is worried about what happened in the 80s. They call it the Volcker effect, where they cut too quickly and then inflation re-ramped. So you're going to then see the next month rates go back up. And that's going to be the yin and the yang for the next 12 months. There's no world where we get back to 2 and 3% mortgages. There's no
Right.
world where we don't have, where rates just all of a sudden go back down to the federal rate goes down to 3%. Rates will be higher for longer. I think there's a great temporary blip that people should take advantage of if they're stuck into some high-priced mortgages. But there is no silver bullet. Any manipulation like that is just going to
Yeah.
artificially increase inflation, which will then, they meet every month. Then rates will go back up, they go back up. So, God, I'm a nerd. Right now, everybody thinks in September they'll go down 50 base, half a point. So that's already priced in. If they were only to go a quarter point, rates would go back up. If they actually went up in October, because see, they're already projecting that it keeps going down. Yeah. If they actually had to go up in October or stay flat, you would see interest rates go up like a full point. So it's not simple. I don't think whoever wins matters. We are stuck in this cycle for the next 2 years.
It'll impact things. I mean, even with like I think we would see a boon to the economy, but I think the only way out of this mess is to completely destroy the dollar. Like that's the only way out, and it might be decades. I don't know. I mean, it's been going on for decades and decades, right? So, inflation is going to. There's these periods where they kick the can down the road. It feels good. It's like a drug. It feels good for a while, but there's no way out besides destroying the dollar, and that's for. This is how the rich get richer. We own assets. You own real estate. You invest in the stock market. Whatever it is, all that inflation just feeds prices on everything. And if you're living paycheck to paycheck, you're screwed. Those are the people that really get hosed. But if you own assets, you ride it out.
Well, I mean, to your point, like how the rich get richer, like when there is tragedy or devastation, I mean, look at COVID. It wiped out how many small businesses, yet Amazon and Tesla and all these other giant corporations just got gianter,
Yeah.
So,
well, they have more staying power. I mean, that is back to your question earlier about entrepreneurs kind of getting, you didn't ask about that, but kind of getting stuck is, once you build up some dry powder, like once you're living below your means or you're making enough money, you can sit on the sideline. You don't have to make money today to win, right? And so, case in point, I've invested in a lot of multifamily over the last 8 or 10 years, 6 or 8 years, I guess, and it's had some performance problems. There's some issues going on, but there's opportunities coming too. Some people that I know that are in deals that I'm in, want out, and I can replace their capital. And the way it works is you get a pref return on the front end, and on the back end, you get a piece of the profit. Contractually, they can't sell the deal, or the GPs will get wiped out until the LPs are made kind of whole. So there's deals right now. I just got presented with several deals, a couple deals that I'm in right now, where I can buy out. We're halfway through. We're 2.5, 3 years into this. People want their capital right now, and they give up the whole back end. So what does that mean for me? If it's like 10, if it's 8 and 10, well, they're going to give up their past 2.5 years of 10, and it's a 5-year project. So I can invest and earn 28%, completely passively on that. So I have patient capital at this point. And so there's opportunities like this as well.
You got any extra room in that for an old friend? Or?
Maybe. Yeah.
I'm just saying.
Yeah.
I've never heard the term patient capital. I mean, I get it.
Like I don't need to make money today. Like
no, I get
I'm
it.
playing the long game.
I get it, but I love that terminology. I mean, I completely understand what you're saying, but it's just like, that's so, yeah.
Well,
and
this
most
is
real
what
estate investors, they're thinking about
they
today.
need that.
Thinking about this week. They're thinking
Yeah,
about
they need
tomorrow.
that
They got to
hit.
pay the bills. And when you've been around for a while and you've played the game long enough, you realize like, I don't need an immediate, in fact, that's the problem with most entrepreneurs. They want immediate gratification, and you need to delay gratification in order to be successful in business and in life, honestly.
And here's the thing that a lot of listeners don't know. They have patient capital, and it's in the equity of their homes. The equity in your homes is very patient capital. And in most situations right now, it is earning a 0 to negative return. And to me, that's neglect. Like if you have $1 million in equity on your balance sheet, that's an asset. But if that $1 million of equity is not producing a return, which appreciation's a return, but that's benchmarked against the negative of cash of taxes, the negative of insurance, the negative of your interest that you pay, not necessarily the principal you're paying, right? So you have to have a true financial picture, because you may be better off taking that $1 million out of those rent houses and getting in a deal like that, to where at least your equity is earning a return. In too many people, I'm glad you pointed that out, Ron, you have equity in the properties that you're invested in through other people. But you have to look at that equity as an asset. What is it producing right now? And that's what I told Jennifer. We have some rent houses that have gone up 3, 4, 5 times in value in the last couple of years. But right now, this year, that equity is not producing a return. And when I talk about liquidating it, I don't talk about then going and buying a Lambo. I don't talk about buying a $5 million house in University Park or Highland Park. I talk about finding an alternative investment that will get me the same tax advantages and a better return on my equity. Because here's the crazy thing. We're both in our mid-40s. We'll just say 45. If you're worth $1 million at 45 and you find a 20% IRR investment, you're worth $2 million at 50. If you do the same thing, now the key is this is why people exit. This is why Blackstone exits. You exit, you go find another 20% IRR deal. I actually recommend you take that $2 million and find 5 deals, put $500,000 each, that way you're diversified. But if you achieve a 20% IRR, you're worth $4 million at 55. If you do the same thing again, you're worth $8 million at 60. The key is at this point, you're not the operator. You're using patient capital to use someone else's energy to double your money every 5 years. That is the key to success, in my opinion. I wish I'd started doing it earlier. What? Why are y'all both smiling at me?
We're just.
So the thing that's the thing.
That's why we're smiling.
I got a little nerdy there. I'm sorry.
No, it's
The
fine.
thing that's the thing. I believe that every investor, real estate investor, is attracted to this asset class because of 3 core pillars. And this is actually what I founded Ternus on a year and a half ago. Number one, they want to make money, right? Like typically people that are making gobs and gobs of money don't really find themselves into the active investor world.
Right.
Number 2, they want passive income or cash flow. Everyone calls it something different, but it's honestly just a thing they're chasing. But number 3, and you've mentioned it a couple times, is they want long-term wealth or to build a legacy, right? Like, and a couple of those terms are interchangeable, but I think they summarize the 3 core feelings behind our customers.
Yeah.
And I'm a big fan of Simon Sinek and the Golden Triangle, right? And maybe talk about, I'm sure you see this all the time, these people that come in and something's missing, but I think they're probably not hitting one of those 3 buttons, right? They're either making gobs of money with no cash flow, or they're making a bunch of cash flow with no equity growth, or maybe they have equity growth, but they're not making any money right now, and their wife's home or husband or their spouse is at home every day saying, we don't make any money. Like, maybe talk about what you're seeing in the investor marketplace regarding one of those 3 things.
That's a big question. So I think for a lot of new people, that you said real estate tends to attract a lot of people that aren't making a lot of money now, right? Or they aspire to. And so, unfortunately, it also attracts people that think this is easy because HGTV and all these other things have made it look like it's easy, but it's a hard business, right? It's a hustle business, but again, hustle's it's a season, right? So I think that
It's a good show title.
the problem is there's a few things we've talked about here today that include this, is that most never operate above the hustle and above the job part. So they need active income. Like if you're wholesaling and that's all you do, you can never get off that hamster wheel. If you invest in some deals and you tuck some away as rentals, then you're kind of building up wealth. Then you get to a point to where there's income coming in from the rentals or other things, which they're never nearly as profitable. They don't cash flow as much as what anybody would ever lead you to believe. But you have another income stream that's coming in, and you don't have to necessarily wholesale as much. And then maybe if you build up your business in the right way, you have more disposable income that you can invest in other people's deals, right? And I think one of the challenges that a lot of people have, if they get beyond the active flipping, fix and flipping, and wholesaling, then they want to own everything. And it's just like, I can tell you this, in all my multifamily stuff, I'm a GP, but I'm fairly passive. I raise money, I help kind of analyze things, but I'm not managing the property and things like that. I don't have the capacity to do it. And I think a lot of real estate investors are like, well, I want to own the whole thing because my return is so much higher. And it's like, well, what if you just play a smaller role, but just do more deals, or find some way to like not have to take on everything, because we all are limited by our own capacity. So anyway, my point is for those that are doing active income, a lot never get beyond that. They're living deal to deal to deal, which is kind of living paycheck to paycheck. And that's the case for kind of growing your business up to where you have time because you've bought back your time from hiring people to do some of the thing for you. And then you grow your business in a way to where you have more disposable income, and you don't go buy toys or buy bigger houses for yourself or whatever. I mean, everybody should do nice things. I do plenty of nice things, but you still want to live well below your means so that you can reinvest that other capital into more passive deals. And you're just kind of playing a few games, right? The passive game, the active game, and you can grow from there. And it just takes a long period of time too. I mean, back to the immediate gratification. I promise you, with our new ranch, like, it's ridiculous how much stuff we've ordered on Amazon. And I'm not joking. It is insane. Like, I can't believe we haven't gotten a handwritten thank you note from Jeff Bezos yet. It's ridiculous. And every day is like, we got 30 boxes. It's just like, how many? I'm literally renting U-Hauls to, like, next time I go out to the ranch, I'm gonna just pump it all in there. We also hired movers, and it's just like crazy, We hired movers to take our Amazon boxes. It's ridiculous. But hopefully that's coming to an end. But there's a reason why I was just talking about this. I've lost my train of thought here.
You said the next thing. You said not buy nice things, but
you're
not afraid to buy.
You should have nice things, but always you want to kind of reinvest in yourself, reinvest in your business, reinvest in your investments.
Well, let me say this, and this is going to sound awful, but I'm going to share our personal secret. You told me the other day, you're like, yeah, I mean, Tim, I've paid like all cash for this ranch and this house and everything in it, and part of me is kind of wondering if I should have. Like, I mean, it's what I'm saying is, just because you were making money, you didn't go get a loan against future income. It was actually money you had that was not allocated towards an investment or savings or something else.
Yeah.
And that's when you buy nice things. It's the old, somebody wrote a book. It's like, if you can't pay cash for it and it's not required to live, you shouldn't spend the money. And I kind of believe that.
I've heard that line before of if you can't pay for it twice, you can't afford it.
Yeah.
And there's some element of that. So, but Yeah, I'm not saying that people shouldn't have nice things, and I've lived a blessed life. I've worked really hard for it. We've done a lot of amazing things, but our biggest assets by far are all plowed into businesses and real estate that will help us make even more money. And it's not for the sake of money; it's for the sake of the game, for the sake of the legacy, for the sake of being able to spend time here with you guys, or whatever it is, right? Buying back our time.
Amen.
So we're coming to the end, but what I'd love to hear is advice for the new guy, advice for the guy that's in the middle of his journey, and advice for the guy that's towards the, way up there.
Let me
Go ahead.
frame this for you. At Investor Fuel, you have gold, platinum, and platinum plus.
Well, there you go.
So the gold levels, like the people that are doing like
10 to 50 deals a year.
10 to 50 a year. So let's start there. Like if somebody's out there in the market today, maybe they're struggling, maybe they're scaling to a point where they're scared. Like we all get there, right? Like sometimes I'll never forget June of 2007 when I'd brought in like more than $2 million of revenue for the first time in a month. I'm just like, I'm looking at the bank account. I'm like, I don't think I should have deposited that all there. So like there is this point to where you don't have to be struggling. You could actually be so successful it's scary. Mm-hmm. So let's talk to the gold audience out there that's maybe a little uncertain in today's times.
Yeah. I think some of it is, this is going to sound like a sales pitch. I mean, of course, we're interested in talking to good people at Investor Fuel, but it's getting around the right people that have done what you're afraid of. Because sometimes just seeing what somebody's done, climbing the learning curve if you're an entrepreneur and you have to figure it all out on your own, or you can find a way to get around people that have done it before, you can climb the learning curve, no joke, 10, 100 times faster with more confidence. Because honestly, when you get around guys like us or guys in our circles, they're not it's not that most of them aren't geniuses, right? It's like, if that guy can do it, I can do it, right? You might feel that a little bit. There might be a little ego, but the truth is I think also, like in our community, people are willing to share. Like, dude, let's sit together at lunch, and I'll tell you exactly how I got through that issue before. I'm going to connect you with this guy that I know, or whatever, right? And so it's just getting around the right people, and a lot of it's just breaking in our limiting beliefs. Like a lot of us got into this business without a lot of money, or without. I mean, I grew up. My whole family is very blue collar, right? All working in factories and all that stuff. So I have and had lots of limiting beliefs that you have to break through those things. And the only way you do that is get around other people that are doing what you want to do. But far and away, I think the biggest challenge of some of the things we talked about today is not getting out of your own way, not hiring people to replace yourself, having a good year and just, either stuffing it away somewhere or whatever, but not putting it back into the business to kind of essentially replace yourself out of some seats that you're in. Because, I say this all the time, if you're a solopreneur or you're a Fortune 500 company, your org chart pretty much looks the same. You got sales department, marketing department, business operations, finance and accounting, HR. You're just all in all those seats, right? So until you can find a way to start putting people into the seats that you're the bottleneck on, you're not going to be able to grow your business. So for a lot of people, it's thinking bigger, getting around people to help you get to the next level. We could have a whole discussion around lead gen and marketing, which most people are afraid to invest in more and more marketing, but honestly, that is the fuel that pushes your business forward. I mean, you can't buy a Lambo and not put any gas in it, right? So it doesn't matter how awesome you are as a business owner, if you don't have more fuel coming in, which for us as real estate investors is leads, then you can only go so far, right?
Excellent.
Last thing I do want to talk about is last year you launched the Fuel operating system.
Oh, yeah.
And I've just heard an amazing amount of positive feedback from my clients and your members.
Yeah.
Could you maybe, I'm not asking you to sell a Fuel OS, tell me why you thought the market needed that.
Well, a lot of people are familiar with EOS, Entrepreneur Operating System, across lots of industries. The challenge is it hasn't really changed much in a long time, and it's not specific to our industry. It doesn't talk about acquisitions and dispositions, and the meetings are general. They're not talking about KPIs that are specific to our industry. So the Fuel OS, Investor Fuel OS operating system, is essentially, has a lot of, if you're familiar with EOS, it would feel very similar in a lot of ways to just a structure of meetings, KPIs, how to track things, how to recruit and hire the right team members. And so we actually give that away for free to our Investor Fuel members. In fact, next week we have our Q4 planning session. And then recently, I don't even know if you know this, but recently we launched, just getting started right now, but we launched options for people to, even if you're not in the mastermind, to hire us to do one-on-one consultation where we actually fly out, do your quarterly and annually planning, manage your weekly meetings, and then we have like a small group format too for clusters of 5 similar businesses that we do some of the meetings. We do them all virtually, but we kind of do them in small groups of like businesses.
So it's really just a practical application of a common business practice.
Yeah. But the reality is most real estate investors, most entrepreneurs avoid accountability like the plague. And when you put in these processes and systems for how you meet, when you meet, what's the agenda of the meeting, what do you talk about, building your team out, it forces accountability because you have to report every week on your KPIs.
Yeah. So I'll wrap up.
Wrap it.
Ryan Harper, Harper Belmont Media. If you need podcasts, video, SMU shirts, reach out to Ryan. Mike Hambright, Investor Fuel Mastermind, multifamily syndicator. Investor Fuel Live is October 7th-ish.
7th, 8th, and 9th. Yeah.
7th, 8th, and 9th in Dallas, Addison.
Grapevine. Yeah.
Grapevine, Texas.
Up by DFW.
And then if you are interested in joining a real estate investor mastermind, he has the Investor Fuel Mastermind. Investor Fuel Live would be a great place to learn about it, but if not, you can go check out investorfuel.com. Their next quarterly meeting comes up at the end of October in the DFW area. And I'll tell you this, you guys all know that I'm a big believer in masterminds, but I also believe that you have to find the one that's right for you. So whatever you're out there thinking, get to know if the main character in the cast is not available, that may not be right for you. But talk to the main character and see if you guys have a alignment in personality, priorities, and character traits. And if you do, that's probably the right one for you. So that's all for this week. Thank you for stopping by, and we'll see you next week.